Welcome to Boston Real Estate Times. Our guest today is Ian Brandon. He is Executive Vice President and Chief Commercial Banking Officer at Cambridge Savings Bank.
Cambridge Savings Bank is a 191-year-old community bank, which is mutually held, which is unique in that we have the ability to provide complex services while also offering the level of touch that one would find at a private bank. Over the course of my career, having worked at multiple different financial institutions, I've done approximately $10 billion in transactions. One consistent element that I would say that carries through all of those transactions are the people. And certainly they're core fundamentals that we look to as it relates to the quality of credit or an opportunity. When you really look at the fundamental component that is most important when dealing with a fungible asset like money, you really come back to the person behind the deal. A reality that we've come to see is that there have been a lot of similarities in terms of an up market and a down market, in that the individuals and the institutions that you're doing business with are really the major determining factor in the overall success of a project or any lending relationship. So when times are good, certainly dealing with the right people, the right groups is beneficial, and the ease of the transaction is typically very fluid and easy. But when things get a bit more challenging, dealing with those same known individuals who are proven and we know have the best of intentions and the hard skills to execute, they're the ones that we're able to work with to find solutions as we see some erosion in the market. One core component of this market that I always like to emphasize is that a down market may indicate to many that it's a time not to do business. But the reality is that many of the most successful developers, investors, really found their place in a down market. And with a down market, you traditionally find tremendous opportunity. It's this one's ability to identify that opportunity.
Ian, welcome to our studio.
Thank you very much for having me.
Excellent. Well, let us first start with you were born and grew up in Switzerland. What brought you to USA?
I was born in Switzerland. Much of it was a result of my father at the time was teaching at the University of Geneva. And moving through that period, my mother had really decided that she wanted to return to the States. So I would say in retrospect, it would have been nice to have stayed.
Let's come back to on a serious topic now. During your career, you have done deals worth $10 billion, which is a lot of money. And what is the one common thread you found in all those transactions you have done throughout that has not changed yet?
I would say in many ways, this sometimes can sound a bit like a cliche, but the reality is it's people. And that is one of the primary cornerstones, regardless of how large a transaction may be. It's the people that you're working with. And typically good people who have the vision, the direction, the dedication are the ones who are going to execute. And really the ones that you find are typically the most successful. So it really is, it's the people.
Now, you have been with Cambridge Savings Bank for about almost 20 years now.
It's coming up on 18. I am a boomerang. I left for a period of time about 8 years ago.
Okay.
But realized that the grass wasn't greener.
Okay.
So very happy to be back.
Excellent. So what has been your experience with the Cambridge Savings Banks as when you think about the market here in Massachusetts?
I think I'll first touch upon Cambridge Savings Bank. And I think it's important to understand what Cambridge Savings Bank is and how it is a bit different than many other institutions that you find in the area. So firstly, the bank is about 191 years old. So that in itself, by today's standards, is certainly impressive.
Sure.
We are also a community bank. We're mutually held, which again makes us a bit unique. But I would say for us, what I find to be so interesting is that we're very much a boutique commercial bank as it relates to the commercial side of the business, in that we compete against much larger institutions. When people look at the transactions that we're involved in, they're often very surprised to see a $7 billion bank involved in some of the transactions that tend to be very complex and in reality much larger than what you would expect to find as it relates to a bank of CSB size. And a lot of that again comes back to what I just touched upon, which is people. And those that work within the commercial division, virtually all of us came from much larger institutions. There's tremendous intellectual capital that we possess within the group. And people operate at that bank and have chosen to stay. And the tenure tends to be long because it is such a unique and pleasant place to operate.
And how many branches your bank has?
19.
19. And some of the main branches, like what places such as?
Harvard Square, Belmont, Lexington.
Oh, that's great locations too.
Absolutely. And then we also have a digital platform as well, Ivy Bank, which serves as a terrific mechanism to really drive deposits. And particularly when you're dealing with what we've seen over the last couple of years, where deposit gathering capital has been a challenge, unless you're one of the money center banks. It's been a terrific avenue for us to continue to build relationships through the digital channel on a nationwide basis, and also providing the commercial group and others with sufficient dry powder to do the business that we need to do.
So now let's talk about the market. And in market, I want to touch on two places. One is that what you guys are thinking as a lender in the today's condition. And the second one is when you are talking to your clients, like, real estate developer or investor or somebody has loan coming up due, what is going through their mind? And third one is how long this type of condition is going to last according to your crystal ball.
Well, I've been looking for my crystal ball for several years now. I think I lost it probably 5 years ago.
Okay.
But in terms of what our clients are looking at is, and again, the market is so frothy right now, and there's so much going on, from geopolitical to the financial component, which obviously is impacted by the geopolitical components. But it's a time in which people are really, in simplest terms, looking for certainty. And the great challenge right now is certainty is very difficult to find. And I think we're in a much better place today than we were even a year ago or 6 months ago, in that people are growing more certain in terms of what things may look like going forward.
So you think today we are better than 6 months ago?
I think we have a better sense of the direction.
Okay. What are some of the glitches or obstacles you see in the future?
The glitches are what's going to happen with interest rates, which I think that's very basic. I would say beyond that, we're really looking at The ever-present question that I think all of us were asked, and I to some degree grow tired of, is the concept of return to work. And are we ever going to reach a point that is in line with what we saw pre-pandemic? And I'd say, and where you're looking at a key component there, is that people have started returning greater numbers. That said, people have also changed the way in which they work, and that you now have hybrid. You have companies that may be okay with people coming in on alternate hours. So they may work more hours 4 days a week and then have a longer 3-day weekend. So there are a lot of interesting things that people are doing, or say having that initial call in the morning and then commuting in at 10 o'clock. And I think depending on the business you're in, all of which can work, but there's one tangible element as it relates to real estate and particularly office.
Sure.
Is that you then have a business owner, a landlord. They have to make a determination as it relates to their space needs. What direction do they move in? Do they move?
So that is, again, my follow-up question on that is, because we see it all the time. I mean, just in my case here, and only one more person comes every day. Everybody works from home. Only on Wednesday, everybody comes, we meet in the office. Work is great, everybody's happy, and all these things. Now I have to decide, okay, do I really need the whole office? So what should I do? And suppose if I leave, what the landlord is going to do, are they going to find somebody to replace? In a smaller scale, same thing is happening in big towers and office buildings.
Absolutely.
So if there is a landlord who has going through that phase, and suddenly there is a mortgage on the building, and how bankers are dealing with that type of situation, and of course they can foreclose on it. But is there any plan on the banking side that how they're going to deal?
To date, the general feeling has been, and this again comes back to people, working with people to find out a way that's mutually beneficial is typically what works best for both the financial institution as well as the borrower. That said, you could be dealing with people who have the best of intentions. Everyone also has a financial breaking point.
Sure.
And when you hit that, there are some cold realities that certainly as an institution we have to deal with, as does the borrower. And in that instance, again, you try to do everything you can, whether it's extending the term, looking for other potential concessions the bank may be able to make in order to ensure that the asset is able to continue to perform and the borrower can make their debt service. But when that doesn't happen, you then find yourself looking at the realities of what is this building really worth? And an asset that may have been worth, for discussion's sake, $10 million a few years ago, if you were to reappraise it today, it could be worth $5 million.
Yeah. I mean, that's what we are seeing, right? The value has really.
So it's very much the reset of the basis on so many buildings on a per square foot level that determines both the opportunity going forward as it relates to that asset, but also the trajectory of that asset under the existing borrower.
So now real estate is known, this industry, for there are a lot of very crazy optimists in the market. I've seen that, the crazy optimistic. And even in this market, some of them are very excited. I'm going to get this. This is a great building. It's a great opportunity. Price is down. I want to buy, and if I can find somebody to help me with the mortgage and loan. Are you coming across that type of situations, or how a Cambridge Savings Bank is dealing with those type of events, those crazy optimistic investors?
Well, and that's sort of the interesting dichotomy that we find ourselves in now. And that's really what we've seen over, I'd say, the last 6 months. We've started to see a bit of a turn in that with many of as the basis has been reset on a lot of these assets, they may not have made sense coming back to the 10 billion, the 5 million now being worth 10 million, now being worth 5 million. We now find ourselves looking at it from that reset basis. The deal now works again.
Yeah, sure.
So at that point, you're then looking at you can now accept significantly less as it relates to rents.
Yeah.
And you may not need to fill the whole building, providing you with additional opportunities in terms of how you may choose to utilize the building. Also, when you reset the basis, there could be an opportunity for conversion to multifamily, to mixed use with maybe a retail component, to a hotel, to self-storage, to any number of other uses that at 10 million, it simply wouldn't make sense.
Sure. So now let's come to some of the services provided by Cambridge Savings Bank. And let's start with alternative lendings. What are the other things you provide?
So we have a fully built out commercial lending group. So within the division, we have commercial real estate lending, which we've been discussing. We have corporate lending, so commercial and industrial lending, servicing businesses. Then we have asset-based lending. And really, I look at the fourth leg of the group, which really supports all the other groups, is treasury services. So it's really the banking services necessary that enables the other three lines to operate.
And also, if you can talk a little bit, I know you said earlier that you have not been able to find your crystal ball, but assume that you get hold of this, and how do you look at next 1 or 2 years?
The next 1 or 2 years, I do believe that things will get better. Do I expect to see a trajectory that's remotely close to what we've seen in the past? I don't. I think that may have been a once in a generation trajectory that may not happen again. But what I do think is that with more definitive information, and as investors are able to pencil out a new opportunity and identify what the upside is, whether or not they're able to achieve their financial metrics and meet those hurdles to determine if it's a viable investment, they will move forward. So looking at over the next 1 to 2 years, today, for instance, we saw some positive news as it relates to inflation. That was definitely something that I didn't expect to see.
Sure, yeah. Many people were surprised.
No question. It was certainly a nice surprise to see. But now the question is that going to now reduce the amount of time that we're going to need to wait for the Fed to take action and potentially look to bring rates back? And if we do see a rollback in rates, that certainly is going to be a game changer as we move forward. So really coming back to your initial question, with certainty, it provides investors an ability to really assess the viability of a potential deal and make a determination as to whether or not it makes sense looking out. Where things have been tough over the last couple of years is that really almost day by day, week by week, things have been changing. So in order to model any transaction, given all of the movement whether it be geopolitical, economic, it's been virtually impossible. And again, as you know, economics and markets, all of the data that we utilize is all historical. And we have to take, when we have no model that properly represents what we're presently seeing, even the best economists.
Yeah, today
they're
no
lost.
way to know. Absolutely.
They're lost.
Yeah.
And so we're really left to look at what's happening in our own respective geographic areas. And that's really where operating.
So in what is your geographic area of family savings bank? Very well.
Geographic area for us is primarily the Boston market. We will look at opportunities outside.
So when you say Boston market, you mean Greater Boston, or
We'll extend a bit beyond that.
Okay.
And certainly we'll look at bordering states.
Okay.
Our general feeling is, and again, it comes back to people. We will follow those that we have a relationship with, those who have proven their ability to execute. We will follow them outside of the state. If it's the first transaction, that probably isn't going to work. So we need to get one or two under our belt, build a degree of comfort, and then once we have that, we would then be comfortable moving outside.
Now, let's stay a little bit more on the commercial real estate side. There are so many mini sectors in the commercial real estate industry. Is there any particular which has really kept the momentum, like multifamily, retail, office, industrial?
I think you just took the words out of my mouth.
Okay.
So I would say the first of which would be multifamily. Boston continues to be one of the strongest performing housing markets in the United States. We're underhoused. There are a number of reasons for that. We operate in a part of the country that is effectively landlocked. So the ability to just build is not an option. It's not as though we're in Houston where you can continue to push out, or Las Vegas. And then you're also dealing with the zoning as it relates to each respective municipality, city, and they can be challenging. So there are not a lot of opportunities or sites for that matter. Simply finding the dirt can be one of the greatest challenges if you're looking to build multifamily or single family. And that's not even touching one of the core problems, which is affordable housing.
So so let's also touch base upon the construction loans, for example. How is that sector in terms of course, nobody's building office building anymore right now, but construction loans for multifamily still, not much have changed, right?
If things continue on, because is it slowed a bit? Absolutely.
Okay.
But are we still seeing starts as it relates to multifamily? We definitely are.
What about life sciences and medical facilities?
Life science is an area in which we have seen some overbuilding. So I think where life science started to go a bit awry as it relates to the Boston market was, I think, losing sight of what the core areas are for life science, biotech, which are really those areas in which they're very close to the major universities. So when you start to push further out, and over the last several years, when you look back, hindsight being 2020, when you move from Cambridge, and then you start to push out a little bit. Next thing you know, you're in Lexington.
Watertown, Lexington.
Exactly. And then you start to push out to Burlington. And that's where I think there were some missteps. I could say maybe some institutions and investors were a bit overly optimistic. It's certainly not something that you can fault anyone for. Because again, at the time, it seemed to make a great deal of sense. But it's an instance where we may have gone a little too far astray from the primary drivers, which are those major academic institutions.
What about medical facilities?
Medical office is still an area in which you're seeing strong performance.
Mm.
A lot of it does tie back to the affiliation with the respective hospital. So if the physician group is tied to a major hospital, there's additional surety looking at it from a financial perspective.
Sure.
In terms of the physician group's ability to repay a loan. And in many instances within Boston, there are a lot of affiliations.
Mm.
In many towns that are closer into Boston, you still find the medical office is strong.
It's not, yeah, sure.
And it's an interesting area as well is the Worcester market, which certainly is very different than Boston, but you're dealing with one of the largest drivers in Worcester being UMass Medical Center.
Sure.
And there have been some very successful projects in that area as it relates to coming back to lab, biotech, medical office, because they are housed right next to a major teaching hospital.
Now, last question for you is, there's so many boutique firms here in banks in Massachusetts, and one advantage I see with a Candid Savings Bank, 190-year-old, it's a big history, it's a great legacy there. Why should I go with Candid Savings Bank?
What I would say is you will receive a level of service that is very different than what you would find, certainly with the larger institutions. But I would say you're getting the same level of expertise that you would find at a large regional, a super regional, or even a money center bank, but with the service level that you would expect from a much smaller institution. And that we always pride ourselves as having one point of contact within commercial for every one of our clients. So regardless of what situation may arise, if there's something that needs to be addressed, they have one phone number. And that one individual will make sure that things are addressed. Now, they may not be the ones who are necessarily taking care of the issue. They will make sure that the issue is rectified and continue to follow up and make sure that people are happy and satisfied with what they've seen. Whereas in many instances with other smaller banks, they're not accustomed to or set up to dealing with more complex transactions, whereas we are. And Bob?
No, that's a great answer. And so the complexity, you can deal with all these complex issues faced by the borrowers and all.
Yes.
Excellent. On that note, thank you so much, Ian, for your time.
Thank you. It was a real pleasure.
Excellent.